Hello and welcome to our market alert video for today, which is March 21, 2025. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And in this week's video, what we're going to talk about is the Federal Reserve and what they did this week. And it appears they're going to do what our fearless forecast said they were going to do. Also, we have had a correction. And for those of you who follow these videos, we told you we thought one was coming about a month ago. So for those of you who watch our videos, you don't need anything else. You can get all your info right here. So let me go over with you. We have several things to talk about. I want to go over with you what the Fed did, what we think is going to happen, and then also I want to talk with you about what you should do and maybe what we could do for you if you were so inclined. So first of all, the Fed said that they really don't see a recession coming. They think that there's a chance of it. It's more than before, but not really high enough to worry about it. They also said that the likelihood is they're going to still be lowering interest rates 2 more times this year. Our fearless forecast, we amended it to say that in June we think they're going to lower interest rates, and now it's looking more and more like that's going to happen as well. And the other thing they did was they used a word that if I was counseling them, I would say, don't ever use that word again. Okay. And that word is transitory. Okay. Does anybody remember when inflation first came out? They were telling us that inflation is transitory. Don't worry about it. It's transitory. Well, transitory. Well, 4 years later, it's still transitory. How long does transitory last? Is it like the rest of our lives? Is it a week? When is transitory over? But anyway, they said that the effects of tariffs would be transitory. We'll see. The Federal Reserve has they don't do a very good job, in our view, of projecting the future. Okay. They react to it, but they don't project it very well in our view. So for those of you who have followed us for these many years, and I know some of you have followed us back when we had our radio show, and also back, in 2008 when we got out of the market and told everybody to sell all their stocks and all that kind of stuff. So right now, our strategy, we're very close to getting out. We're probably about 2 or 3 percentage points away from reaching our sell signal, but we have not reached it yet. And so therefore, we're still counseling our clients to hold on, put on your seatbelt and hang in there. Now, the thing about it is that, and I have to preface this by saying there are no guarantees. I'm making no promises here when I say this, and it could turn out to be far worse than what I'm describing, okay, just so you know. But the way our strategy works is that there's a place certain where we're going to get out and protect, all right? We call our strategy invest and protect. And so there's a place certain where we will get out so as to protect our clients from what we think could be coming after that, i.e., like in November of 2007 when we sold, we said there's bad things coming, and boy, did bad things come. The credit crisis followed. And then the day before the pandemic was announced, we also said it was time to get out. And guess what? They shut the economy down, and you know what happened to the stock market after that. So our goal is to protect our clients from downside losses. But what it does, the dynamic of that creates a buying opportunity. And what I mean by that is that the way our strategy works is that, as I said, we have a point certain where when we reach it, we're going to get out. And if we're close enough to it, then our view is it becomes a buying opportunity. Because if you buy here, there's only this much downside before we're going to trigger out and sell. So the downside risk is mitigated. Now, it could blow through that, and it could be worse than I'm describing, certainly. But if things hold as normal, then either it breaks through, in which case we get out soon after we bought, and downside risk is mitigated. But if it doesn't, then what it could also do is go back up and reach new all-time highs again. And if that were to happen, then you could see a big rise with the opportunity on the upside could be greater than the risk on the downside. And whenever we have that dynamic, we think it's a good time to buy. So if you've got cash that you're thinking about, I don't know your situation. I'm not suggesting you do anything right now, but certainly talk with one of our retirement planners and see if it's appropriate for you and if your risk profile allows for that and all that kind of stuff. But we view this right now as a buying opportunity, and would encourage you to visit with one of our retirement planners. One thing I want to go over with you that I don't think I've shared with you in the past, but I think it bears showing, is our investment principles. One of the things that we believe is that you should not wait until the last second to decide what you're going to do during times of adversity. Okay, you should have a plan in advance for when bad times come, and that way you know what you're going to do. Okay, if you wait till the last second, then you react in fear or in greed or in panic for that matter, and that generally is not a good way to make decisions. So I want to focus you in on investment principle number 2. Growth is important, but protection of principal is more important. Since we work with people who are within 5 years of their retirement or the first 5 years of their retirement, and we consider that decade to be the single most important decade of your financial life, we think that protecting principal during that period is more important than growing your money. Now, certainly we want to grow the money. I'm not saying that's not important, but protecting your money is even more because again, if you lose a lot of money in the 5 years before you retire, you may not be able to retire. And if you've already retired and you lose a lot of money in that first 5 years, then it may be very difficult to support the lifestyle that you want. So that's why we think that you should have a strategy to address yourself on the downside. And so number 2 there is very, very important and guides much of the decision making that we do. So just to recap, our fearless forecast is that this year should be a good one. We also think the Fed will start lowering interest rates in June. They may do it sooner, but we think it's June. Given that, we think inflation should be okay, not where the Fed wants it, but okay. Tariffs are probably not going to be the big, bad, terrible thing that a lot of people are worried about. And given that, the forecast should hold. But again, we don't have a crystal ball. I do have one. It's in the shape of a tennis ball, you may notice. But the thing about it is I haven't figured out how to turn it on. That's the problem with this thing. And so our fearless forecast is just that. It's a forecast. We've been remarkably accurate, but it is just a forecast. And we may override it if our strategy says it's time to sell. And right now we are very close to actually reaching our sell signal. So stay tuned to this space for what's going to happen next, or better yet, go visit with one of our retirement planners and build your plan with them to protect your retirement and invest for growth. Okay, so that's where we are. I hope this video found you healthy, wealthy, and wise. And please like and subscribe to this video. It would help us enormously if you did so. I'd be very grateful. And then also share it with your friends. If you think they could benefit from it, that would be great. So thanks for watching, and we'll talk soon.
Retirement Planners of America.